at the end of the day, with Basel III elevating gold to a high-quality liquid asset on par with cash and bank stock at the central banks, really, eventually, we're going to measure everything in gold. And that's why the central banks have been buying so much gold. The amount of dollars held in foreign accounts is less than 50% of the total of global currencies held. It's a way of saying that the de facto dollar standard as a world reserve currency is over.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 27th through November 3rd, 2025, while supplies last. First this week, 1-ounce gold Valcambi Combi Bars that can be broken into 10 1/10-ounce bars are just $215 over spot. Next, 90% constitutional silver is just 30 cents over spot per ounce. Finally, assorted silver rounds are just $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today, our good friend Rob Kientz from the Freedom Report. Rob, thank you so much for joining us today.
Thank you for having me on, Elijah.
Well, it's great to have you back. It's been far too long. I did want to discuss the metals markets, what we've been seeing recently. Today on Wednesday, as we record this, we're seeing a pop in both gold and silver. Maybe they've bottomed, we'll see, but I did want to get your perspective on what we've seen over the last couple of weeks. It's been a really crazy market as, London didn't seem to have enough silver, so there was this huge backwardation with respect to the futures and the spot price, and then we saw just a collapsing price over the last week and a half or so. So what do you make of what's happened in both gold and silver over the last few weeks?
Well, there are a lot of things happening. I mean, we could probably go on for hours about that. To be fair, the gold price had risen. It was the steepest incline in the gold price, basically dating back to when the dollar became a dollar in 1913. Because if you remember, they weren't really tracking its value, or it was pegged for a large part of its history until 1971. And then in 1971, Nixon pulled us off the gold standard. And then in 1974, they did the Commodities Act so that gold would trade as a commodity, not as money. And that's when you saw a lot of speculation come into the gold and silver price, as well as a lot of the other commodities. And so it's really since 1971 that we can kind of gauge what's gold price should be in dollars. And I actually think what dollars price should be in gold with the world de-dollarizing. We'll get to that in a moment. But, since 1971, we saw the sharpest spike over an 18-month period in the gold price. It more than doubled during that period. And so we were due for a cooling off period because remember that the prices of commodities are determined in the derivative markets. As I document on my program all the time, and I'll be putting a master class out on this in a couple of weeks, exactly how the prices are derived. So here in the U.S. they're derived on the COMEX, which is run by the CME Group, and they're derived in London, which is the oldest gold market in the world and the most prominent still. They're derived by an over-the-counter trade. In both cases, the over-the-counter trade is a type of derivative because there are more claims on gold and silver than there is actually gold and silver ounces, because a lot of people just want to get exposure to the price. It's kind of a way for the big guys to invest in it, much like we invest in ETFs. When you're investing in the ETF, you're not actually going to get exposure on most of the ETFs to the gold and silver. You can't redeem, or in the case of Sprott, you still have to have a lot of money to redeem. So the average person that buys a share of an ETF is not going to actually get a piece of the gold and silver. The COMEX and the London market work in much in the same way. The COMEX works on a futures basis. The dominant contract right now is December. And the reason it was set up that way originally, and I learned this when I got my Series 3 license probably about 16 or 17 years ago, which covered both currencies and commodities, is originally was set up as a hedging market. So say you're a farmer, you're going to be growing wheat, and you're worried about the price coming down so that you'll have a loss because you have to plan ahead of time. You have to know how many acres to plant. So if the price comes down, what you do as insurance is you buy a short position on the market. So if it does go down, you can recover at least some of your loss with your success in your short futures position. But in reality, about 99% plus of the trades done on a daily basis on the COMEX aren't legitimate hedging, because the positions are so big as to dwarf the actual amount of product produced, whether it be gold, silver, oil, sugar, those types of things. And when you add into it, if you combine the data from COMEX, which is produced by the CME Group and also produced by the Commitment of Traders report by the CFTC, which is a regulator. You combine those two reports, and then you add in the Office of the Comptroller of the Currency report, which reports on all derivative positions and who holds them. You find out that 4 big banks hold most of the short positions in the precious metals, specifically gold and silver, and those are Bank of America, HSBC, Citigroup, and one other I'm losing off the top of my head, but I'll remember it. So those 4 banks have done that for a long time. And so they not only hold them for their house accounts, they hold them for customers, and we don't know who those customers are. I suspect a lot of those customers are sovereigns. And so as you look at the meetings that are going on around the world with Trump and other people, Trump and Xi Jinping, for example, in China, Trump and the Japanese prime minister, which you just had, and also Trump and the resource deal they did with Australia, there's a lot of expectation that gold and silver prices don't need to rise too high because of those deals. And if you look at the traders, when you have this extended, any sort of extended downward move or upward move like we've had in gold and silver the last year and a half, traders will want to reset their positions for the next futures contract. So all in all, a lot of this is just repositioning until the end of the year. And some of it is repositioning given what's going on in the markets with regard to trade. Now, also, we have Fed meetings going on yesterday and today, which are going to dictate whether the Fed lowers interest rates again. They just did at their last meeting. I believe it was a quarter point. They may lower it again this year because in the Fed's eyes, inflation's come down a little bit. And even though the job situation is not great, it's not enough concern that they would want to raise interest rates. They would want to lower them to spur the economy just a little bit because they're concerned about jobs. And so because inflation is lower than it was, say, 2 years ago, the Fed's expected to continue to cut interest rates a little bit to avoid what would be an official recession in the government's eyes. Kind of take all of those factors into account. It was time for gold basically to cool off a bit. The long-term trend certainly is higher, but I'm not sure that the world is ready for a much, much higher gold price because it points to the issues with the fiat currencies. Now, the central banks of the world have been de-dollarizing, meaning for the first time this year that the amount of dollars held in foreign accounts is less than 50% of the total of global currencies held, which is a de facto way of saying, or it's a way of saying that the de facto dollar standard as a world reserve currency is over. So as countries are de-dollarizing, there's some sensitivity to what that does to treasury markets and the treasuries that foreign countries hold. So it's kind of like they're navigating the de-dollarization as these other powers, the BRICS powers and other nations, begin to build up their own currencies. So nobody really wants us to run too fast, too hard from a sovereign perspective because it overexposes all currencies. Because if the dollar has trouble, you know that the Chinese yuan's going to have trouble, the pesos are going to have trouble, the yen is going to have trouble, and so on and so forth. So they're trying to navigate the de-dollarization and the eventual lead into CBDCs. So all of those are different factors in it. But at its most basic level is that traders are looking at all these things and they're saying, we had this big run up in gold. We need to reset positions. The banks want to reset and short cover because they had massive short positions. And this is basically essentially how a lot of the big banks also make money and their clients make money. If you go back to that fine that the CFTC levied on JP Morgan a few years ago, $920 million US for admitting to manipulating the treasury and silver markets, is they do manipulate the markets on a short-term basis to make money. And it came out, the JP Morgan said, for example, that they make $1 billion a year on these types of trades. It's big business. So they're willing to take the fine in order to continue that trade. So in the short term, this can be very damaging to precious metals investors, and it can be very frustrating. But one thing that I wanted to point out, if you look at the longer term, gold has been in a 25-year bull market. Silver, not quite 25 years, but it's starting to follow as its younger brother. And silver has a little bit more explosive upside because it's used more industrially. So we're actually running shortages from what the mines are producing to what we actually have. So I think the silver situation is going to come to a head faster than the gold situation. But the good news is, over the last 25 years, gold has followed very closely the CPI index over that period of time. Now, most of us don't believe that CPI is the real inflation rate, but the traders do pay attention. So even though I don't want people to panic, because even though we have all of these factors going on, and it looks like gold has this $300-$400 fall, and silver has, $4 or $5, $6 fall in a very short period of time, a lot of that is just rebalancing. It's rebalancing One, the futures trade and the OTC trade in London. Two, it's rebalancing the risk of London not having enough silver and the COMEX sending bars over to help bail them out. And three, it's rebalancing ahead of these trade deals and other deals that are going on in the economy. And four, the sovereigns don't want gold and silver to run too quick because they're not ready with the CBDCs. So what they're trying to do is manage that trade. And that's how I know a lot of the sovereigns are in using JP Morgan, Bank of America, HSBC, Citibank to do these trades. Under the cover of those banks to do it for them because they're trying to manage movement into this new CBDC system. Now, if we look at CBDCs and digital IDs, they're probably going to be really ready for prime time in a couple of 3 years. They're being rolled out and tested right now. So I expect that this kind of shenanigans in the gold and silver market to continue by the sovereigns intervening in it, much like they intervene in the Forex markets and the treasury markets and the stock markets and the bond markets. They're going to continue to do that until the new system is ready. Now, I threw a whole bunch of stuff at you, but that's really kind of the calculus that you need to have when you look at these markets. And the one thing for precious metal stackers to understand, especially if you're new to this space and you're just learning, it's not dependent on the physical trade at your dealer or from APMEX or from Miles Franklin. It's really dependent on these derivative markets that sit on top of the precious metals. So just because the precious metal price comes down, you have to look at these other intervening factors more than you do what is the worth of your metal in dollars. And the last thing I'll say, and this sort of extended answer to your question, is at the end of the day, while we measure precious metals in dollars or pounds or yuan, at the end of the day, with Basel III elevating gold to a high-quality liquid asset on par with cash and bank stock at the central banks, really, eventually, we're going to measure everything in gold. And that's why the central banks have been buying so much gold. And when they flip that switch to CBDCs, they're going to reset the gold price in the U.S. and around the world to capitalize those CBDCs as the new currencies and to allow them to write off all the old debts. That's why Judy Shelton was on Twitter this week saying that we should do a gold-backed treasury, because what they want to do is back the treasurers with gold when they're ready to do the CBDCs, reset the gold price, and bring all of that debt down or write off a lot of that debt using the nation's gold and other things like cryptocurrencies and Bitcoin.
Now, with respect to silver, we broke through that that critical $50 level. Your perspective on that? Do you think this pullback is, in some sense, in reaction to that, kind of just digesting, that level that has been resistance for 45 years or not, whatnot?
Definitely, and it is. People don't. There's some people who don't like technical analysis when it comes to the metals because they're like, you shouldn't be doing that on a chart. It should be fundamentals. Alistair McLeod is a big one that says this, and fundamentally, he is correct. Fundamentally, we should price everything in the precious metals. But we live in a different world right now, and we have since 1913, especially since 1971. The metals are seen as assets by the government, and they treat them as assets, not as money. So when you see silver breaking $50, that automatically sets off alarms with authorities saying, wait a minute, we don't want that to get too high for two reasons. One, they use a lot of silver in everything, including missiles, medical, all that kind of stuff. The U.S. government, as I've been expecting for many years, named silver a critical mineral this summer, and the U.S. government just spent $4 billion in $1.5 billion of that buying silver for its own coffers so it can feed its military and other uses that the government uses, and $2.5 billion of that goes into the development of new silver mines and new silver processing here in the United States. Trump also just recently agreed to an $8.5 billion deal with Australia concerning rare earths, and several billion of that is going to go into rebuilding the supply chain, not only buying the rare earths, but building the supply chain to get off of Chinese dependence on processing, which they hold over 90% of processing of most critical minerals in the world. So yes, we need cheaper prices for silver for industry, and we also need to control that. Well, the government feels like it needs to control that price so that it doesn't expose the dollar too quickly. So there are two major reasons for that. And in the background, the U.S. government is trying to spur the growth in silver discoveries and silver development, as well as other critical minerals on its critical minerals chart. And that is a benefit to the public that they do it. It may be frustrating to investors. It's certainly frustrating to me, but I can see the reasons of why they're doing it. Now, eventually, we all want that to end. But again, I have to urge caution, as I've said on your program before. We don't want it to end too quickly because, Elijah, only about 2 to 3% of Americans really invest in the precious metals. We need to get the education out and those numbers up so that more people have them, so that when reset comes, it benefits more people. So I always look at these pullbacks, even though they're frustrating to people, as a blessing in disguise because it allows more people to get involved in the precious metals and dollar cost average their way in at cheaper prices as we go, up into the higher regions. But yes, that $50 level is critical. And what it's mean is we basically unlocked the big boss in a video game, meaning silver can run as far as it needs to run now. Now, they're not going to just let it run completely, like I said, but silver's not going back to the days of $25 silver. It's just not going to. It's going to continue to run. The governments around the world are going to try to continue to manage it, and the big traders are going to do it for them and make money on those derivative trades, and that's their benefit for helping out the sovereigns and other players in the field that don't want those prices to rise too fast. But if you're a stacker in the physical, or if you're storing it, or even if you're using a digital version of it, that gold and silver, that's a blessing to you. If you like gold and silver, buy more when you have these dips. That's a perfect time to get in.
Now, there has been a talk out there about the kinds of silver to invest in. I wanted to get your perspective on that, especially as some people see this as a great opportunity, for example, to get the 90% junk silver. Other people see that the tide has that there has been a shift in what is being demanded, and this is kind of a new normal where junk silver is highly discounted because it's not pure silver and the refiners are backed up and stuff like that. Your perspective on that with respect to the pure silver versus junk silver at the moment?
Okay, I'm going to answer that question, but I'm going to back up just a little bit and talk about a typical American cycle, and most of your audience will be American. So in America, when the generalist investors, the non-stackers, which is about 97-98% of the population, wants to get in silver, they start first at the ETFs. And we've noticed over the last 6 months, over $5 billion going into the various ETFs across the world. And I think about $2 billion of that went into SLV, which is the biggest of the bunch, which, by the way, stores at silver in London, which, by the way, was the reason that London ran out of free-floating silver and the COMEX had to bail them out, is because the investors came in and bought ETFs, much like they did during the original silver squeeze back a few years ago. You had the TD Securities analysts come out and say, we're hitting a real physical silver squeeze now, not just a pretend one that we had a few years ago, and he's warning. And so more people are getting interested. But first it starts with the ETFs, and then it goes to the popular sovereign coins. The two most popular sovereign coins are going to be the American Silver Eagle and the Canadian Silver Maple Leaf. And then kind of third place to those are all the other various issuances like the Austrian Philharmonic, the UK coins, all of those coins. And so once the premiums are elevated on those, which they have been, I think Silver Eagles on APMEX last Friday were as high as $11 to $12 premium over. What happens when there's a shortage on those is people begin buying stuff like junk silver, coins, and bars. As late as Thursday last week, I was looking at my local wholesalers. I have accounts with 3 of them from when I owned my coin store. And you could get silver bars actually under spot. I was being quoted 30 cents under spot per ounce for a silver bar, just a regular silver bar, name your brand. And the junk silver was sitting either below spot or at about spot if they had any. So yes, those are considered not as desirable as the sovereign coins that come from the U.S. Mint or the Canadian Mint or these other mints. But in reality, silver is silver to me. And I've always said junk silver is a great way to get in because you get it at a discount, especially before the big demand comes and drives premiums up on everything, which we're not there yet. And the bars and the what you call generic coins or independent mint coins are also just as valuable. And a lot of times it's a way for people to get in more cheaply. So if you don't want to pay those $12 per ounce premiums on American Silver Eagles, and sometimes it will double. We saw a couple of years ago, American Silver Eagles were $25, but it cost you $50 to get one because of a temporary shortage from the mint. If you don't want to play that game and pay those high premiums that will bounce around and sometimes cause you to have a loss in your portfolio, go for the junk silver. I love junk silver for the simple fact that it's either 90 or 40%, most of it 90, and it was U.S. minted coinage, and you could get it cheap. Like, why wouldn't you? When I was buying all my silver, I was buying bags and bags of it and storing it. I thought it was a great deal. And the same thing goes for gold. If you can get a 1 ounce gold bar and it's from a reputable firm, it's in its assay case, it's a Valcambi or something like that, go for it. I mean, gold is gold. Why wouldn't you? And this is the pattern typically in America. And it's, we need to educate more on these other types of gold and silver that people can get into, which will save them money overall on their investment.
Now, with respect to precious metals, there's really a few different reasons to invest, right? But one of them is key, as you mentioned, like the U.S. coinage, right? It kind of gives back people. It was originally money, right? And it was meant for people to save, and that's something that people like to do, is save in precious metals, and it really gives people back their freedom. And your whole report, Freedom Report, is about that topic of freedom and sovereignty and all of that. I did want to ask you about something that you've been diving into recently, researching about digital IDs, how it seems to be popping up everywhere around the world, and how do you think that this could be a threat to freedom?
Yeah, essentially digital IDs in the United States are an extension of a real ID on your driver's license, for example. Many states have had real IDs for a long time. It's an enhanced security features, and you have to, and basically most people have to give a thumbprint or a retina print in their state, depending on their state laws, to get a real ID. So they're now tying your biometrics to your issued driver's license. And then the next logical step was simply to digitize those so that eventually you could tie it to transactions in the system, because all they got to do is connect databases, and all of a sudden your fingerprint is now tied to any transaction that you make electronically. And the IMF's stated goal for the world is get rid of cash. They wrote that report in 2015. I reported on that many times. And they want to take us into a cashless society. It allows them to control monetary flows to try to avoid recessions and things like that. But if you add in Dodd-Frank laws with confiscation, the people are going to be the ones bailing out the government at the push of a button with little ability to object to it. So that's the danger of having the real IDs tied to transactions. We've been covering CBDCs for a long time. I know a lot of the people in the alternative media have been, especially people covering precious metals. Even though the United States doesn't want to do CBDCs, doesn't want to do them, they're going to use stable coins as their replacement. So whether it's a stable coin based on treasuries or a CBDC around the world, it's basically the same system. And it's a digitized asset that's based upon confidence of the government, much like the dollar and treasuries were. And we saw, well, that got us. We're at $38 trillion in debt and declining dollar and declining purchasing power. But by tying the digital ID to the CBDCs, now they can control what you spend money on. So go to China, for example, with their social credit system. If you don't do what China wants, they shut off your ability to jump on the train, get a job. And specifically with the digital IDs, it was very sort of under the radar how they popped these out. Over the summer, 17 countries around the world, and that number is now up to 27 in my research yesterday. So now 27 countries around the world in the last 4 months have implemented digital IDs. A couple of really nasty examples are Vietnam, where if you don't have a digital ID on your phone, you can't get a job and you can't use your bank account. And that is law as of right now in Vietnam. In Mexico, they're requiring every citizen to put their biometrics, give the biometrics to the government. When you get your driver's license or filing sort of paperwork, the process there is when you interact with government, the Mexican government suddenly becomes super efficient and they collect that data from you very quickly. And now they're expected to implement controls about what you can do if you don't have a digital ID as well. Australia is using AI to capture information on people, biometrics information on people, and they're expected to implement the system as well. And of course, there are 27 now countries around the world. In the United States, this summer it was 11 states that took the real ID into its digital form. And as of my research yesterday, there's now 14. So that's roughly, what is that? About a little bit less than a third of the overall amount of states in the union now have digital IDs. So with the onset of CBDCs and stablecoins, it's expected to be completed through most countries in the world about 2028. And the digital IDs were just supposed to be completed between 27 and 28. You now have a system that ties your biometrics to everything that you use. And I'm expecting them to get rid of cash as the world de-dollarizes, and you'll be in a completely digital system. A couple of risks there. If you're in a completely digital system, you can't transact privately. And if the government wants to bail you in using the money in your bank account, they can do that according to Dodd-Frank and other laws that have been passed, because you don't own your bank account, you don't own your brokerage account. And if they take it further and we start tokenizing everything and the government decides, well, you've tokenized your car, we've tokenized your car, your house deed, we've tokenized all the assets in the ground for all the resources, and we just simply want to pass a law that now they're ours. They just have to push that button, and now all the ownership then moves to the various governments around the world. And that's not really conspiracy theory, because the WEF has been coming out and saying you'll own nothing and you'll be happy. And a lot of the nation states are agreeing to this around the world, that type of policy around the world. And this is being enacted through these supranational agencies that supersede each nation state's either constitution or their governmental framework into things like the IMF, the BIS, and these other agencies as well. And so we're really marching toward a system in which you're going to have not really a one world currency, but you're going to have a set of regional currencies that are digitally controlled, digitally issued, in which you, at the end of the day, you don't really own anything. And if you don't do, what that could lead to is a tyrannical system where if you don't do what they want you to do, then they can basically turn things off or take things from you. For example, if they've tokenized your mortgage and they've frozen your bank account and you can't work, eventually they're going to confiscate, your home, and then where are you going to live? Those are the types of things that have been talked about in those circles for a long time. There are tons of policy papers written on it, and not making this up. This is literally what they want to do. And it's under the guise of controlling recessions and crashes and that type of thing. And it's a really potentially dangerous system, and it's being implemented very, very, very quickly. So people need to be aware of what's going on.
And obviously people can stand up against this by kind of moving more of their wealth outside of the system, refusing to cooperate with this digitalized system. Did you have any last thoughts on that? I guess ways that people can stand up against this?
Yeah, the first thing is to get into real hard money, which is gold and silver. It's nature's money. The second thing to do is you want to go to your state house and fight it. I spent the last year or year and a half with Citizens for Sound Money passing gold legal tender laws and also educating legislators on what's going on. The funny thing is, when I was in Florida, for example, none of them really knew about real IDs. They kind of started to learn about CBDCs, but the legislators didn't know about real IDs and things like that. So even your legislators that are making laws aren't fully aware of this system. Again, it's being put into place above the federal level, and it's being brought down to the states and the people. And that's the reverse of what our Constitution says. Our Constitution, the Bill of Rights, Amendment 10, says all the rights not specifically granted in the Constitution fall to the states and the people. So what we want to do as the people, work within our states, which are our partners, to reclaim those rights and to assert those rights. So really, if you're watching this show, it's great that you're watching the show and educating yourself, but you have to get out of your seat and go down to your state house in person and tell your state representatives that you don't want this system, so that the states can begin fighting back. Because right now, we still have a federalist system in which the people hold incredible amounts of control and incredible amounts of individual power and sovereignty. But we're quickly losing that because the people aren't really paying attention as a whole to what's going on. Certainly doesn't apply to people on your channel, but it does apply to the majority of people. And so what we don't need 100% of people to do this. We need 3 to 5%. If you look at the revolution, there's about 3% of people fighting for the freedom of the other 97%. So it doesn't need to be everybody. It just needs to be a consistent vocal minority that goes to the state houses and says, this is not what we want. And you have to go in person to do this. And if enough people do this, I can tell you, I worked in Florida with some great state legislators and committees within the bureaucracy there in Florida, and they were very open-minded towards these freedom principles. Not all levels of government are corrupt that people feel that they are, especially at the state level. There were people that will listen, and we still have the ability to exercise our rights. But you have to get up and go do it. Take the information from this video, go down and talk to your state representatives and work that system. We need people to wake up and work that system. One way you can do it also is by donating to Citizens for Sound Money. You can just look them up on the web. There's a $25 and $100 membership, which goes towards people actively campaigning in different states to make gold legal tender and then to fight against CBDCs and digital ID. So that's another way that you can do it as well.
Fantastic. Well, Robert, we really appreciate your time today, as always. If our viewers are interested in learning more, they can go to your Freedom Report on YouTube. Tell us how they can find you.
Yeah, so just look up Freedom Report on YouTube, Twitter, and now I have a Substack as well where I'm writing. And the cool thing about Substack is there isn't really any sort of filtering as there are in other platforms. So the content on Substack's a little bit wider, and it's also free. So just go read those stories on Substack as well.
Fantastic. Rob, thank you so much for your time today, and God bless.
Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 27th through November 3rd, 2025, while supplies last. First this week, 1-ounce gold Valcambi Combi Bars that can be broken into 10 1/10-ounce bars are just $215 over spot. Next, 90% constitutional silver is just 30 cents over spot per ounce. Finally, assorted silver rounds are just $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.